If you're looking for professional day trading education and high level trade analysis and dissection, you've come to the right place. My name's Pat Mitchell, and I've been a professional day trader for the past 11 years. And I'm here to bring you exactly that professional, high level day trading education, all here for free on YouTube and on X. And tonight we're going to be discussing a couple of trades. We're going to be discussing and a couple of things. We're going to be talking about tight ranges, day trading. And then we're also going to be discussing how to work two different strikes, okay, as a management tactic in your trade. So if you don't know what I'm talking about, that's okay. You're going to learn something. So give me one sec. Let me fire up these charts and let's rock and roll. I hope you all had a wonderful day. Let's do this. Okay, so now that we're into the charts, let's go over this. So let me go to the first set of trades. So on Qs, what we were watching for here was a potential short. Now, we did open below and we wanted to work the trade into this previous close level and essentially risk its top range here, which it seems far, but actually it isn't. It's a point and a quarter. It's not very far. It's not a lot of risk, especially when you're dealing with, a $565 stock or ETF. So on this here, this initial trade worked extremely well. It worked fucking awesome. Uh, Opens up, washes, pops into that, execute, add, and then pay ourselves. So I'm going to zoom in a little bit here so then you guys can see this initial trade a little bit better. So let me grab my drawing tool. Market opens up, washes, pops up into the level, execute. As it pushes coming into pre-market range, I'm going to add, which I did. And then you're just patient with it. And then it came all the way down. It came right into a long entry that I wanted to take. But with SPY doing what it was doing, Qs doing what it was doing, and especially where we were on the daily chart, even though I keep saying that this market is going to continue to squeeze, I did not get the entry I wanted, even though this was the initial entry I wanted. It didn't come into the actual level. The reason why I didn't take that is because I've already locked in. I've made my profit on the morning, and I don't want to fuck that up, right? So I consider this essentially done. Then I was moving on to a separate trade. As this came up, I worked the secondary trade. Now, let me clean this up again. I worked the short yet again because Tuesdays and Fridays, for those of you that are just joining us, I work with a small focus group of traders and I run both screen shares at the same time, my main screen share and then a live trading course screen share. Now, some of you might be wondering, well, what's the difference? Well, there's a big difference. When what I call the momentum course is a live trading course where I get members into specific trades they wouldn't normally get themselves in. We work on management tactics. We work on some pretty high level stuff where it boosts. That's why it's called momentum. It will basically give your trading career momentum. And I know that sounds very salesy and everything, but it's not open to the general public. It's only open to members that have been with me for at least a month. So I'm not trying to sell you on that. You'd have to be a member in order to sign up for that. And we work on very specific things. So on this trade, our very first trade is done. Now I go in and I take a trade. And to be honest, I hope it goes against me because then I can show members management tactics. Okay, this is why you'll continuously see me green while most traders are going to be red on these trades. It's the ability to remain calm under the given situation, as well as managing the trade to the best of your ability and seeing the chart for what it is, not what you think is going on, but what is actually going on. And this ended up being a real beautiful trade. So entered in, let me get my drawing tools again. Come on. So entered in here, and it was very small entries, then here, and then into previous close, all small entries, and then you get really particular and you really need to watch what entries you're going to take next. So then it becomes, you want to see if it's going to hold this level and pull. So what you're watching for, and this is the important part, this is what you want to be watching. So at that time, I'm entering in because this was originally taken, this original trade plan to get it down to here, and it failed. It kept coming up. That was what the 565 puts. Okay. So now that this is going up, I'm going to enter into the 566s, and I'm not getting carried away with that. Now, I entered into the 566s. I paid myself. I have some position on, and then I re entered into those 566s very small. Now I'm waiting. I'm going to let those 566s just do whatever they're going to do. Okay. I'm not going to pay myself. And there's a reason for that. Let me explain. So, what we need to realize when we're trading option is if we start consolidating, which we did, and as soon as it came up, I said we're going to start developing a range, which it did. I've talked about this a lot. And I'm going to continue to work my 565s because there is an ability, it does have an ability to come down and be green. But if it's not going to pull, I don't want to get too much size into those 565s. Okay. So I don't want to get too much size into those 565 puts because if it doesn't pull back, it's going to be very difficult in order to get that position back green. The longer it consolidates like this, those options will melt down and you would have to essentially add in extreme size in order to get in or get out with any profit. So you don't want to do that. That's why you take the 566s. Now, those 566s should only be added into if this doesn't give you an opportunity to get out. So let me explain that. So I understand that this might be a little bit of um, an advanced lesson, but I'm going to show you here. So if you were to take the 566s, okay, so you're in those 566s and you just let them go. Now it's less than one strike away or about one strike away. So what you would do in this situation, because again, I know it looks like that squeezed very hard and fast, but it's only a point it's a point and a quarter from your entry. It's not far away. It looks like it, but it isn't. So you need to be, and I didn't do this. This is not how I traded the 566s. I was able to just get out because I worked my 565s, but I'm showing you how I would have worked this position. So there would be a way to enter into these big pushes. You could get out green, possibly here, or scratch. Or if you gave it more time and you worked it into a full risk type of scenario and you hammered it here, that would take care of any loss you would have got here on those 565s. So I hope that makes sense. But that's what I'm doing with those 565s and those 566s. I'm using the 566s as a basically an ace up my sleeve. Okay. I'm only going to add into those and work that position if I need to. I didn't need to though. So what I started noticing here on those 565s, which are down here, is it even though it was consolidating for a long time, it wasn't melting down. So what I did is every single time there was an opportunity to add in, I added in and then simply got out as soon as I managed that position. And that there, even though it is a failed trade, it did not work. Didn't work. Didn't give sufficient pullbacks. Not for the way I was trading it. It still resulted in $1,686 in profits. Now, sure, that's not a lot, not for what my drawdown was, but this is where a lot of people get things fucked up when they're looking at risk reward and how much drawdown you had to how much you came away with, and it's risky and all of this. If you know how to manage these trades, you will be green in positions where the rest of the world will be red. And that's how my hit rate is what it is. These are the types of tactics that I can teach you because not every single market is going to be difficult like this. This is a difficult market. It's not an easy market. It's an easy market if you're just fucking banging off and basically guessing at this shit. But if you're trading pure strategy right now, it obviously works. You can see that, but it will be more difficult to manage due to time involved in the trade as well as your patience tolerance. Okay. So if you want to learn how to do this, come to tricktrades.com and you will be green when the rest of the retail traders are red in these positions, hands down. And if you don't want to, that's fine. That's on you. If you want to continue with the free stuff, continue with the free stuff. But you just got to remember, you have to like and you have to subscribe, and it is just going to take you longer. So if you got all the time in the world to reach your day trading goals, by all means, stick with the free stuff. But for the ones that are serious about this, come to tricktrades.com. Adios, folks. I hope you have a wonderful weekend. Adios.